Ladies and gentlemen, good day and welcome to the Q2 FY21 earnings conference call of Navneet Education, hosted by Prabhudas Leeladhar Private Limited. As a reminder, all participant line will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Jinesh Joshi from Prabhudas Leeladhar Private Limited. Thank you, and over to you, sir.
Prabhudas Leeladhar, I welcome you all to the 2Q FY21 earnings call of Navneet Education Limited. We have with us the management represented by Mr. Sunil Gala, MD, Mr. Deepak Kaku, CFO, and Mr. Romi Mistry, Head IR. I would now like to hand over the call to the management for opening remarks, after which we can open the floor for question and answers. Thank you, and over to you, sir.
Thank you very much. This is Sunil Gala from Navneet. Thank you all for attending this call. Let me briefly tell you about the business operations for Q2. As you would have seen, we have seen degrowth in Q2 as well as in Q1 also. And the main reason I would say is for the Indian business, be it curriculum or be it stationery. Reason being non-opening of school. That is the only reason for which we have not been able to attend the school business as expected or as in routine. So, of course, I'll answer all the queries related to that. But let me give you some guidance as per the information received from various state governments and including central government. So first, let me tell you about Maharashtra and Gujarat, which is both of them have announced that they will start certain grades or certain classes, to be specific, between from 9th standard till 12th standard from 22nd of November. Now, if that really happens, I am saying this if because at times they have announced many things, but they fail to do so because even they are confused on the outcome once they open. So at present it looks quite certain because overall the COVID cases have reduced, so they will have to take, and in any case they cannot afford losing 1 year of each and every child. So if that restarts, then the next step that they have already mentioned is that in couple of weeks they will decide opening of class 5th to class 8th also. So overall from 5th to 12th grade, there seems now some clarity that starting from 22nd November, schools will start opening and gradually they will open up the grades. If that happens, I am sure the demand for the books which we have lost during Q1 and Q2 both will reoccur. And common question that we also had earlier, whether just for 3 months will students buy books. But what now we hear from the state governments that they are likely to extend the year till May now instead of March every year. And if that really happens, then but obvious students will have to complete the curriculum, which of course the reduced curriculum, and that curriculum will have to be imparted during this 4 to 5 months. As far as Navneet is concerned, the reduced curriculum is known to us. Accordingly, certain subjects we have revised the books for this specific year, and as and when school reopens, we are very confident that the revenue will start clicking. So overall, we are also awaiting for the schools to reopen, and we will see the success. As far as exports of stationery is concerned, more or less we are in line with that. Of course, there is no growth seen till now, and the loss that we had in Q1, my team is confident to recoup that loss of sales in Q3 and Q4, Q4 in particular the most. So that way, as far as exports of stationery items are concerned, we are quite confident to maintain the revenue that we had achieved last year. So net, let me also say that even if schools are reopening, part of the grades are opening, we will definitely see some degrowth in the current year in publishing as well as in stationery domestic. So we are not able to gauge how much loss would that be for the year, but it could be around 20 to 30% as of now. I am not that specific on the numbers this time because we ourselves are not clear what the final decision from the state governments. So I'm sure you all would have seen the numbers, so I'm not repeating anything on the numbers, but this is overall business overview. Let me tell you also that on digital front, lot many things are happening at the company. Apart from our core business, we are also we did recently a big survey among schools across India, and we have identified the gaps that teachers and the principals feel should be filled. So keeping that gaps in mind, we are repurposing the content for Maharashtra and Gujarat that we already had, and have started developing new content for CBSE schools, which we will be able to sell across India. Apart from that, there are many activities that we have decided, have started implementing also. And one of that activity that will be soon implemented, that lot many titles of Navneet would be available now digitally in an interactive way. What I mean by that is there are lot many features beyond a physical book that will be available for students to learn from, and with that I'm sure the appreciation by the students will be much higher and adoption will be much higher. No doubt, though we are launching this, we are calling that DigiBook. Now this DigiBook, we are not going to charge anything to the end customer for a couple of months right now, but what we have done is whoever buys physical books, they will be able to access these digital books as well. So by that we will come to know the usability, the acceptability of these books, and with that experience from next year we will start charging the same. So that is another digital front we are doing. As well, whatever other points are mentioned in the presentation are also been initiated. So company is very confident and now very aggressive on digital front, that whichever way we can disseminate the content that Navneet has, or new content that Navneet will create, will be disseminated through these digital platforms. So overall, we believe in next couple of years you will see Navneet, various products from Navneet Group on digital platform. So this is as far as the digital initiatives are concerned. So I think I'm not going more in detail about the numbers, which I would like to answer whatever questions that all of you have, as you have already received the numbers. So I give this back to Prabhudas Leeladhar for next proceedings.
Thank you very much all. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask any question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may please press star and 2. Participants are requested to use handset while asking a question. To ask a question, please press star and 1. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have a first question from the line of Umang Shah from Asian Market Securities. Please go ahead.
Hi, sir. Am I audible?
Yes, please.
Yes, sir. Good morning, sir. Thank you for the opportunity. So
Yeah.
my first question is, sir, why has the e-cents declined by 67% for the half year?
Okay. So should I answer one by one question?
Sure,
Yeah.
sir. Whatever is comfortable for you.
That's right. So normally what in big cities that we all sit in, we all read that online education is going on very well. Now,
Right.
unfortunate part is that in SSE schools, where 95% of the student community of the country learns from, there the usage of online has frankly not started. Very few schools would have started that. Schools would have referred to some digital content, but that digital content, students buying and using it effectively has not started. So I can say that more than 700 odd schools have accepted our B2C product, which they have already referred to the students, and schools have paid certain amounts to us after collecting it from them. But till the time schools do not reopen and till the time those students do not pay full money, schools won't pay us. So we have not recognized that as a revenue yet. But overall, usage of digital platform or online platform in SSE schools is not really effective, unlike CBSE and ICSE schools. So that is the main reason. But we believe that once schools reopen and schools start receiving money from the students, if they pay us, then we will book the revenue. That time we may see little better revenue.
Okay. Thank you, sir. Sir, the second question was with respect to Indianica investments. We see that the losses in Indianica are even more than the revenues even for this half year. So have we not initiated any cost-cutting measures? And if not, then what is it that we are investing in Indianica for currently?
So first, let me clarify that Indianica business has a different season. So 80% of the revenue comes in the fourth quarter. So if you see corresponding years also, there would be always losses in the first 3 quarters. But now if you compare this with the earlier years, expenses have substantially reduced. So enough measures have been taken to reduce the expenses. Only thing that we expect and we require is the revenue, good revenue in the fourth quarter. Now, as far as this year is concerned, we are very confident. Of course, though my confidence goes with the happening that the schools will be opened up and be at least in next academic season. So in that case, we will have orders which we will supply in the fourth quarter. And if that happens, then this year itself you will not see losses at all. Rather, it will be positive. So we will have to wait for the fourth quarter to complete and see the numbers. Normally, first 3 quarters are never good in this business.
Got
As
it,
Indianica's business is concerned, yeah.
Yeah, got it, sir. Thank you so much. And sir, the last question was, sir, the thing is right now we're only focusing on or making sure that our business recoups once the schools are opening. Sir, as per you, are you getting any guidelines from the government with respect to the syllabus change, or that is not in something that they're thinking about?
So as per new NEP guideline for next year, it was announced to change curriculum of 9th grade only. Now, at least in the 2 states that we are operating, we are not seeing any work done on that front by the state governments. So somehow as of now, we believe that next year to change the curriculum of 9th grade by both the states looks not possible. Even if they change, we have very, very little inventory since now we know that 9th grade will be changing. So there is no concern to us. Even if they change, then we will create new products and sell accordingly.
Okay, great. Thank you so much, sir. I'll join back the queue.
Yeah.
Thank you very much. Anyone who wishes to ask any question, please press star and one. We have a next question from the line of Abhishek Tandon from Bowhead, India. Please go ahead.
Hello.
Yes,
Am I
please.
audible, sir?
Yes, please.
Yeah. So, my question is regarding the EBIT margins from the publication sector. So, what I've seen is that our median EBIT margin from last 10 years stands around 33%,
Right.
from publication sector.
Right.
And our highest margin has been 36%, but in the financial year ending 2020, our EBIT margins were 30%. So, I just wanted to know the reason why our EBIT margins are low in financial year 20.
I will answer, and I'll also ask my CFO Deepak to answer that. But let me tell you that one was we had lost business of around 15 days in every company that we have, that is Navneet and Indianica in particular. So that loss of sales would have if we would not have lost that business, margins would have increased. And Deepak, if you could answer, what were the other reasons of reduction in EBIT margin?
Sure. There was one provision for impairment which we had recognized in the publication EBIT, which was amounting to for impairment and e-sense, which was amounting to 3 crores 73 lakhs. And also during the last year, there was a one-off VAT expense
Yes.
which we had recognized of 13 crores 20 lakhs. So that is the reason there was a drop in EBIT.
Okay.
Now you understood, no? This VAT expense which we were fighting with VAT department.
You guys settled the case, right?
Yeah, we settled the case, so it was a one-time expenditure, and that reduced our margin.
Okay. Yep. Thank you so much, and I wish happy Diwali to everyone.
Thank you.
Thank you.
Thank you very much. A reminder to the participant to ask a question, please press star and one. We have a next question from the line of Pawan Ahluwalia from Laburnum Capital. Please go ahead.
Thank you very much. A couple of questions. So,
Sure.
As I understand it, you're basically saying that inventory losses are not a risk at this point because we have very thin inventory, and because it's very unlikely that there'll be any syllabus change, since if they had to do a syllabus change, they would have had to announce it by now so that books could be printed, etc. So most likely syllabus change is in FY23, not in FY22, and so we don't need to worry about inventory risk.
Only one correction I should say. Even if they decide to change, it is only one grade, which is 9th grade. It's not curriculum change for all the grades. So therefore, even if they change, whatever little inventory that we have for 9th grade, which is very, very less, that only could be the loss.
Okay, because earlier they were considering changing it for different grades, no, not just 9th.
No, so year-wise they have set out a plan. Starting 22, academic year 21-22, they wanted to change 9th standard. Then every year 1 or 2 standards they had decided to change, which you can see in NEP guidelines also.
Okay. Because and so then FY23 may see multiple changes, so that could be a big revenue year for you.
Definitely. So FY23 they had decided for 10th grade. So then if they don't change 9th grade, then it will be 9th and 10th grade. 2 grades will change in that year.
Understood. Okay. And on a cash flow basis, are we expected to be sort of cash flow positive this year?
Yes.
Okay. So you don't expect any cash bleed to happen?
No.
Okay. One or two other questions on stationery exports. We saw a little bit of flattening of stationery exports this quarter, so I'm just curious, why was that, and what is the outlook going ahead in terms of growth on stationery exports? And secondly, on the schools that we're running, we did a capital infusion. Is there a chance that we may have to infuse more capital, because obviously schools are right now stretched with everything that's going on, and how do we see kind of value unlocking in this investment over time? Is the idea that we would sell it to a strategic acquirer? What is, because we have a private equity partner there obviously, So it would be good to just see how you're looking at that.
Sure. Your first question was on
Stationery exports.
Yeah, stationery exports in the second quarter. So post this pandemic, which has affected across the globe, even our buyers were not clear how their sales will be impacted. So they did call for the goods, and it is a yearly order that they place. They can't suddenly place new orders and call for it. That's not a practice, not practical. So whatever orders that we had in hand, that we supplied in this Q2 also, I agree that for last 3 years there was substantial growth. So in this Q2 we did not see much growth. Simultaneously in Q1 also there was dip because we could not manufacture for 45 days almost. So we could not supply. So part of if we see full half, then whatever dip that we have seen, we believe we'll be able to recoup in the fourth quarter. But growth in this year seems practically impossible as far as stationery is concerned, stationery export is concerned. But let me tell you what we are talking with the customers, or what feelings that we are getting from the customers, that most of them want more and more. So in terms of inquiries, there are so many new product inquiries have come in, which we are developing, sending them samples, so that will materialize over a period of time. Overall interest of theirs buying from India has increased, and as we have been always telling, that first priority always we get, because we are catering to them satisfactorily for so many years. So future of exports looks very, very bright based on the inquiries that we are getting now. But for the current year in particular, we will not be able to grow because of first 45 days loss and overall confusion at every level, including our customers. Now coming to your point on school. Schools, we did invest at 7 crores only, but overall capital raise was around 230 crore. So a new investor, a third new investor has already come in, and they have invested more than 200 crores in the business on a conviction that the model that we have created is far superior to any of their investments in school management business across the globe. So the company has sufficient liquidity now, and rather of going slow in that business, we have decided to grow faster. There are a couple of reasons to grow faster, because many independent schools have really suffered very, very badly this year, and many of them are up for sale. Pre-primary or kindergarten schools, as we all call it, more than 50% of them have already shut down in the current year. So there is lots of opportunity. I don't think so demand will decrease. It is question of 1 or 2 years due to this pandemic that schools may see, our school business also will see little bit of challenge, but opportunity wise it looks very, very bright. So unlocking of that business is concerned, I would say indirectly it has already happened in the current year due to new investment. But now we believe that the model is so robust that should Navneet unlock that value or continue to grow without more investments, continue in the business without new investments, will be a priority for us, I believe so right now. Having said that, in this pandemic year, very happy to say that 90% of the students are learning online in all the schools that we have, which is 35 in number now. Only challenge that this year that we are seeing is the receipts of fees. Yeah, so that has all parents are not really paying in time or paying in very few installments. So there also conservatively what we have done, whatever fees that we collect, that only revenue that we are recognizing. Overall net this year also we will see around 20% dip in the revenue from the fees, but As I said, model is so strong and opportunity looks very, very bright. So I doubt we should think of unlocking, instead grow value in this business. That's our belief right now.
Okay, just one quick follow-up on the stationery exports. What are your customers saying? Are they worried that because children are learning from home, they don't want stationery, or people are not going to office, they don't want stationery? What is causing the confusion? Because in some products like, athleisure or home textiles, etc., you're seeing roaring growth in demand. What is it that is keeping them conservative on the demand for stationery?
I would say similar situation majorly in the US where we export. Schools also have really not opened. Once opened, again shut down. Therefore, the upliftment of stationery has not really picked up as they were expecting. So they also believe that it is a phenomena for the current year. It cannot be forever. And learning from home, finally also, even if that happens, stationery would be required by the students. Without stationery or without writing practice, it is impossible to study. So they are not really worried more on reduction of the demand.
Got it. Thank you.
Thank you very much, sir. We have a next question from the line of Nagraj Chandrasekhar from Laburnum Capital. Please go ahead.
Hi, good morning, sir.
Yeah, good morning.
Question from me. You said in your earlier guidance that you...
Can you please speak little loudly, please?
Hello, am I audible now?
Yeah, now better.
In your opening remarks, you said you expect a 20 to 30% decline this year, going by the reopening of schools in Maharashtra and Gujarat expected post Diwali.
Right.
That would, for the year, going by the first half numbers, that would mean revenues of roughly 500 crores in H2. Is that the expectation?
Yes, please. Because once schools reopen and the major grades, that is 5th to 12th, which contributes maximum in our total revenue. So even if we discount 10-20% in those grades, we believe that at the year end, if schools are reopening by starting from this month, we should see good sales growth in Q3 and Q4, and therefore maximum reduction that we will see would be between 20 to 30%.
Got it. So, and then I guess the products that are used for the exams, the guides, etc., those you won't see a huge decline at all because they'd be needed for the year-end exams. About workbooks, do you see a bigger hit there, or how do you think? How really are you getting to this number? Are you assuming a discount throughout, or what exactly are you assuming for this estimate?
So you are right. Guides should have a much lesser impact. Now, as far as workbooks are concerned, it all depends on school, how much aggressive they want to go in teaching to their students. Practically, if you see that lesser the time with teachers, they will need more and more supplemental products to teach to the students. So therefore, guide, even workbooks, they will have to use, they'll have to make their students practice more and more at home. So I don't think so there'll be challenge in workbook also. What challenge that we are seeing, frankly, is in pre-primary and primary, that schools are not likely to open in the current year, and therefore whichever schools have taken interest or will take further interest and ask their students or parents to buy for their children so that parents can teach, only that sales will happen. But from 5th to 12th grade, keeping in mind if schools are reopening, we'll see very little dip in the sales. But I was talking 20 to 30% at a company level, including pre-primary and primary sales.
Understood. And how big are sub-fifth class products for your revenues?
Come again, please.
How big are classes up to 4th standard in our publications revenues annually?
So pre-primary and primary put together is around 20% of our total revenue.
Understood. And secondly, sir, the slide in our presentation about digital investments.
Right.
where we have mentioned two avenues of investments totaling roughly 40 to 65 crores.
Right.
Could you give a sense of where exactly these could be spent, and the timeline of this spend, and what would be the mode through which we sell these products?
So if you have that slide in front of you,
Yes.
first I have said about repurposing present digital content and creating fresh content, and investment will be between 25 to 40 crore over 2 years. So when I mean by content is just not content, even the delivery platforms also we need to create, that we have understood recently when we did a survey. So overall investment between 25 to 40 crore we invest, and with the gaps that they expect us to fill. So the products that we will deliver, then finally with these investments, again our core markets, that is Maharashtra, Gujarat, and all over India CBSE market, which will be new market for us, will open up. So sale of these products will start from next year, but completing the total content and the platform will take over 2 years. So does that answer you as far as digital content is concerned, which was our core business till now? Then the second was, I said DigiBooks. So that investment is very, very small, hardly 50 odd lakhs of rupees. Mainly it is lesser investment because lots of digital content that we already have ready at eSense will be used in DigiBooks also. So there is a special platform to use these DigiBooks, and apart from various features on the platform, lots of animations, question answers that also will be added in these DigiBooks. But overall investment will be hardly 50 odd lakhs of rupees, and that is being that will be rather given to the students from this month itself. Then the third item that we are talking about is creating interactive digital content for 0 to 8 age group, and that is likely to investment of 25 odd crore. Now that is very, very interactive platform that we have decided to create, wherein lot things will depend on the parents, the new age group parents, I would say, and if they start using this platform for their kids, it will be a great help, because it will have so many features that children will be, I would say, playing as well as learning on this platform. And we have analyzed a couple of such platforms world over, and these are very, very successful platforms, particularly in the West. So similar kind of interactive content we have decided to give it for the 0 to 8 age group. Other is we want to take advantage of various edtech initiatives in the country. I am sure we will not be able to do it ourselves. So we are searching, as well as my M&A team is continuously on the job of identifying good edtech companies. Our focus will be again K-12. So whatever that we are doing organically, beyond that, if there are any other areas where we can participate, we'll identify such company and invest in that company to take opportunity in the growth overall what is happening in edtech. And finally, we have, while being very aggressive on this, we are receiving various proposals for different type of partnerships through which we can disseminate the content that we have already created through different platforms. So on that, I'll not be able to specify properly right now. We are under serious negotiation with someone, but so there are various opportunities emerging on edtech. So overall, I would say it's not 40 or 50, 60, but overall I will say, including investments, we have decided to invest up to 100 crores in next 2 years.
Understood. And how much would we be spending on capex on the stationery exports part? I guess that is the only other investment that we have in the near term?
So that was that was already planned. So we are in the process of acquiring land and thereafter construction. So altogether around between 50 to 60 crores will be invested for stationery exports.
Thank you.
Yeah.
Thank you very much. We have a next question from the line of Anuj Sharma from M3 Investment. Please go ahead.
Yeah, thank you for this opportunity. I just wanted to ask, see the opportunities in the publishing segment in SSC in Maharashtra and Gujarat will be limited. So what are the opportunities we are exploring in terms of other regional boards for our content? That is part A. And second is within ICSE and CBSE boards also within Maharashtra and Gujarat, we are seeing numerous competitors who are coming along. How do we plan to tackle them and increase our market share in both ICSE and CBSE in Maharashtra and Gujarat? Thank you.
So Anuj, right now publishing for other regional boards is not on the card, and particularly after seeing opportunities in EdTech, we really do not plan to grow in other geographies as far as SSC curriculum is concerned. With regard to CBSE, ICSE curriculum, and you are right that various competitors have already come in our core areas also where schools are converting themselves to CBSE pattern. So there we have done two things. One is the Indianica products are being now marketed very aggressively in these two states. Added to that, as an internal competition also, we have created full series of titles at Navneet also, and with a brand called Rise, R-I-S-E. So with these two brands, Rise and Indianica, I'm sure when Navneet offers some product to the schools who were buying Navneet products earlier, we will have definitely more priorities and preference. So the advantage and the beauty of these products are that apart from it being accepted in Maharashtra, Gujarat, where our core markets are, now with this we have already started marketing Rise products also at various places across country. So now Indianica and Rise, these two brands will cater not only across India but also in the state of Maharashtra, Gujarat. So overall we have covered ourselves and deal with the competition.
Okay. And within the ICSE and CBSE boards, we are seeing that schools are being very rational, that they are giving one topic to one publisher. I mean, they are also trying to play safe. So even if we succeed, is it possible that we might get 3 or 4 subjects, or our success will be limited to 1 or 2 subjects? How do you measure success in both CBSE and ICSE boards?
I fully agree to this, which is a common phenomena. Only thing I can say that for Maharashtra and Gujarat, where many schools have converted themselves to CBSE, though they haven't got certification from CBSE, they are called CBSE pattern schools. There, of course, we will get more number of titles prescribed by them. Meanwhile, these new schools which are emerging in these states or across India, which are called CBSE pattern, again 9th and 10th grade are SSC only. So up to 8th grade, when as Navneet we go, we are very confident that we'll get more subjects. For rest of India, that phenomena is very difficult to break because schools also want couple of publishers to be dealing with them. So getting more than 2 titles per school, titles, when I mean title, that if they select a subject, then from grade 1 to grade 8, same publisher remains. So that way, to convert beyond that looks very difficult right now. Unless we have an excellent digital product, that is the plan right now, that we will have excellent digital product based on our products, books itself, then the possibilities of higher number of titles will be high. But that's the plan. I can't really confirm that it will really get converted.
Sure. Thank you. And my last question, a small one. Let's suppose 5 years out, what percentage of publication revenues can you expect from these non-SSC Maharashtra and Gujarat-based patterns? So basically CBSE and ICSE across the country. What percentage?
In terms of absolute number, I can say as per our plans, in next 3 years we want to touch 250 crore. That looks now possible because of the digital product, because of the second series also that we have created under the brand Rise, and the digital platform or digital content that we'll be creating. I am sure schools will be attracted to buy Navneet Group's product over the others. So that way we are confident that around in next 3 years we should reach around 250 odd crore.
Okay, and what is that number now, sir?
That is only 70 crore.
All right. Thank you so much. Thank you.
Thank you very much. We have a next question from the line of Sonal Kohli from Bowhead, India. Please go ahead.
Thank you for this opportunity. Sir, you mentioned about a new investor in your school business. Could you help us with the valuation at which this investor entered, name of the investor, when the deal happened, and, your stake post-dilution in the school business?
Right. So the valuation considered then was 1150 crore pre-money, and they including us and Sequoia invested small numbers. So altogether we raised around 235 crore. And Sofina is an investor, Sofina.
Okay.
And our 1 minute, I'll tell you. So Navneet's Deepak, can you tell that number, please?
So Navneet's stake before the dilution was 33.45%, and now after the new investor come in, our stake is 27.69%.
Okay. And sir, as far as your local is concerned, Foray is concerned, what are the kind of risks do you see? What kind of team have you hired for it? And is your team completely built, or are you still looking for, good people who have experience globally or in India on this front? This was one question. And the second question was, what will be your dividend policy this year? As an investor, my recommendation would be not to worry too much about a dividend, but do what is right for your business. If cash is more important for you and investments are more important to you this year, rather than necessarily continue with the dividend, treat it as a one-off year, and do what is right for the long term of the business. But I would love to hear your thoughts about the same.
So I agree with your thoughts as far as dividend policy is concerned, that this being an exceptional year, it will be very difficult for us to consider that. And particularly when we have decided to go aggressively in digital business. So therefore, distribution of dividend this year looks rather, I would say, challenging. Internally we will discuss once schools reopen and once we see some business happening, then we will have confidence in thinking also that should we or not. But overall, as of now, my view is internally that this year we'll have to skip dividend, being exceptional year. Now, as far as digital teams are concerned, yes, we already have the senior management, new people appointed in last September or in October. So they have already joined in, and accordingly business plans have been being made. And we are, of course, looking at good people, good management level teams to support us. Now, majorly, I would say requirement for us as of now is on sales and marketing. On technology as well as on content, I do not think we really need more people, but on sales and marketing, we will need more and more people.
Sir, one thing we have observed across technological space is that, the reason why these technology companies have been so successful is that they are very disruptive. And while many existing companies in their own fields have tried to enter into these areas, usually because they are very cash flow and profit focused, on a every yearly basis, they're usually not able to deliver because, the mindset is of cash flows, etc., while these guys burn a lot of money on new products. So considering, you have an established business where you've been making a lot of cash flows, and, how are you treating this business differently? Is there a discussion of having a completely different approach to this business? Because the requirements to succeed in this business are very, very different than your traditional business, and time is the essence because if you don't capture it, somebody else will capture it.
So I appreciate and agree to your point, but let me tell you that, of course, Navneet cannot change its thinking process or style suddenly. Now, keeping that in mind, what we have done is, yes, we want to go aggressive, but we want to focus B2B and B2B2C market. We don't want to focus more on B2C market right now, where companies have really spent huge money, created brands. But I'm sure you would be knowing, out of 4,300 odd edtech companies in the country, we are seeing hardly 10 of them really succeeding well. On profitability wise, still I do not know who have started generating profits. But in terms of valuation, I agree that we see 10-15 companies have generated valuation. So we feel that there are some other ways also now. The strengths that Navneet had was content and reach. Keeping those two strengths in mind, if we just focus B2B and B2B2C continuously for next couple of years, I am sure we'll have sustainable business and later profitable business also. And B2C at present looks challenging for us to really go and very aggressively and burn money. But I feel for next 1 year or so, let us experience with aggression in B2B and B2B2C only. B2C, we are going to go post 1 year, not immediately.
Sir, one suggestion, and I also wanted to know your thoughts. As far as your B2B business is concerned or B2C, whichever business model you decide is best for your company, we as investors would hardly know as compared to, your knowledge about the business. Would you be open to the idea, in case you need a war chest, like, some of your listed players like Info had done, raise money for this growth business separately with a separate team and ESOPs because for the reasons I mentioned, the war chest may be more than 100 to 200 crores you may be thinking right now. And the opportunity size could suddenly be so large compared to what we can think today. And the guy who moves first or is second, that person really has a chance. The others won't have the chance, So considering you have all the content, strength, etc., would you internally, have you discussed or would you be open to discussing these kind of things? Get some outside money, get a high profile, high quality team for only this part of the business, and if required, hive it off into a subsidiary or a separate company, with, different deliverables, so that, you marry the strengths of Navneet along with the strengths and agility required in this space,
That are the same thoughts that are being discussed and agreed also internally. Only thing, dilution at this stage, or we set up a good platform first and then dilute. These are the two questions that we internally debate. Diluting at this stage means will be very, very costly affair. So we believe let us have something on the platform, a couple of things, whatever that I discussed on EdTech. And once we can prove in next couple of months that yes, we have done this, and then to dilute will be a better idea. That's our belief. But principally what I'm agreeing to you is that we are ready for discussion and dilution going forward and raise good amount of money. Whatever money that we are committing today, 100 odd crore, that to Navneet has committed. Now, we don't want to stop with that number. We want to raise capital and grow very aggressively. That is also being decided internally.
Sure, sir. I'll reach out to Romy for a discussion separately
Sure.
on the subject. Thank you so much and all the best.
Yeah, thanks.
Thank you very much. Anyone who wishes any question, please press star and one. We have a next question from the line of Umang Shah from Asian Market Securities. Please go ahead.
Hi, sir. My questions have been answered. Thank you.
Thank you very much. We have a next question from the line of Pawan from Lebanon Capital. Please go ahead.
Thank you. Just a sort of follow-up question, looking for a bit more detail on some of the points Sonal had made. So when you look, could you give us some color? I see your point that you're doing B2B and B2B2C. Could you give us some sense, when you go into this market, Byju's is obviously the biggest, best funded edtech player in the country, and at least in Delhi, I see that they're partnering with various schools where, when you go outside a school, you often see a sign saying powered by Byju's. So clearly they're quite aggressive in pitching edtech products to schools, even in the B2B channel. And my guess is they're not the only ones. There are other people trying to do this. Right. When you go into the market and try to do this, what is your differentiation versus these guys? And what's the advantage you really bring to the table? Because with the amount of money they have, they can easily hire 30, 40, 50 retired Gujarati, Maharashtrian, school teachers and develop a curriculum in 6 to 12 months. Right, so the content advantage can be neutralized. They certainly have best-in-class technology, all of these things. So when you go and pitch your product versus say them, what do you see making you win based on what what you've seen out in the battlefield so far?
So my answer to this would be, first of all, there is enough opportunity. Only one player will not be able to suffice to that. Secondly, 1 minute. If we understand schooling system, examination system in the country, then there are certain more gaps that teachers need just beyond content. So if any company gives away a product which gives good quality content as well as lot many assessment tools, that is what is required by the school. As today there are not good opportunities or options available, they might have preferred a company. But when some company comes up with many other features that teacher or school would require, then preference may shift. But all in all, I'm saying the market is so big that many players will have success. So just shying away from what is happening today and not doing anything may not be a right decision. So we believe we also will have enough opportunity going forward. And what I was trying to say, that examination, Navneet has understood examination patterns over the years, change curriculum, all that will be required. You just can't create concepts and continue to deliver it to the school. School children at a ground level, I'm saying, really gets confused when they read in a book some different examples of the same concept and see different videos of the same concept. They get confused. So it is very important that content is definitely mapped to the books that they use. That is very important. So our idea is, with our experience of over 60 years, we will go in the similar way, that we'll have base product being printed book. And also I can tell you that just digital content is not a solution for learning. It has to be a blended learning, and that has been proven across the globe, just not in India. So someone has to come up with the total solution, and they will have more sustainable business going forward. That's our belief, understanding, and accordingly we are acting.
Got it. So because you publish the textbooks, you're better qualified to design the supplemental product, because digital is basically supplemental, is what you're really saying. It's not going to. Do you see any of the digital businesses, whether it's eSense or the other products, cannibalizing the core product? Could we see people using fewer textbooks and workbooks and just using the core product and the digital product instead? And if so, what does that do to revenues, profit pool, etc. for us?
As I understood, whether schools have adopted only digital and not the print products, you are saying?
Yeah, so suppose the school says 2 years from now, 3 years from now, let's get rid of workbooks and we'll just have a digital alternative to workbooks.
No. So let me clarify one more thing. Why are workbooks? That is for the assessment, right? Assessment of a child. Same assessment, if incorporated in a digital product, can be a solution. So I agree that print product by workbooks, few schools or many schools may discard. But if they get a feature in a digital product which allows teacher to assess a child, then it is a great product for them. None products are available as of now in the market. So content creation capability that Navneet has, be it supplemental products like guides or workbook for assessment, that capabilities will be incorporated in the digital product, and therefore we believe it will have good acceptance.
Does that change the revenue or profitability from the product? I mean, do we make more money off of selling the print version or the digital version? Or, I mean, do we have a sense of how, because if in the next, say, 5 or 10 years, large parts of our business, let's say the workbooks, go digital, what does that mean for our profitability?
As what we understand, of course, profitability will increase because many costs that we incur doing physical book business will get reduced. So straight away, if we calculate our gross margin is 50%, it means 50% we are spending just on raw material conversions and transportation of those products. That is not required. So automatically, even if we sell our product at 50% discount over a printed price, over a physical book, then also our profitability remains the same. So if we have little more pricing power, then profitability will increase.
Understood. And basically what you're saying is that, schools are conservative entities, change is slow, not rapid, and an established, entrenched player doing basically whatever it takes to give people a good digital offering has a big advantage versus a disruptor trying to come in and offer something completely new. Because the inherent conservatism practice, the use of teaching, the fact that teachers are used to teaching a certain curriculum in a certain way means that the entry opportunity for the new guy is only going to come if you guys are asleep.
Agreed. So we have to come out with the right product which everyone benefits in the ecosystem. And if that's so, then it will remain a very sustainable and a growing business. Does that answer you?
Yes. Thank you.
Thank you very much. As there are no further questions from the participants, I now hand the conference over to the management for closing comments. Over to you, sir.
So thank you once again to all of you to have attended this conference. Company is very confident of its future, including digital initiative that it is taking. And this being the disruptive year, not disruptive year, we have faced challenges first time in the history of Navneet. But if we exclude this year, then the opportunity, growth potential in every respect is quite high. So I once again thank you all for attending this call. Thank you.
Thank you very much, participant. On behalf of Prabhudas Leeladhar Private Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.
Thank you.
Thank you.